Welcome back to the channel. I'm Foreman and this has been a particularly busy week. I'm going to be telling you the UK stocks I'm buying now, the UK stock I'm selling now, as well as my comments on the Bank of England raising interest rates, and also what I've been doing in the recent trading update slash profit warning on Boohoo stock and what my thoughts are about that, and whether it's time to actually continue buying or cut your losses and walk away. So if you like this video, please drop one of these to help beat that YouTube algorithm. It is much appreciated. So when we look at my portfolio, the FTSE 100 is down 0.3% for the week. The FTSE 250 is down 0.64%. The S&P 500, as of recording this video, is down 1.82%, and the Nasdaq 100 is down 3.35%. My portfolio has definitely outperformed this week. I have lost a total value of 15.3% wiped. And it's important to note that this is a majority of my net worth in the portfolio. So to have that much wiped in 1 week is quite spectacular. And you'll see that actually my emotion or mood towards it is quite positive. In fact, when I woke up on the day of the trading update for Boohoo, which I believe was Thursday, I woke up with a grin on my face because I saw the shares. I saw how much they were down. I was like, cool, I get to buy some more shares in one of my favorite companies. But I will talk more about that because I did try and maintain a very balanced view, and I looked at the company again as if it was the first time I had seen them. And in regards to Bitcoin, Bitcoin is down 6.45% compared to my 15.3%. It's been a busy week, that's for sure. So the Bank of England has raised their interest rates to 0.25%. This was a push up from 0.1%. This marks the second lowest the interest rates have ever been. And so at the moment, obviously, this is a step up, but it's hardly going to combat inflation, which is what they're trying to do, which means that investors likely anticipate future rate rises coming in the next year. They're talking about, at the moment, that the winter months driving up the rate of inflation from 5.1% to 6% next spring. So we're in for a bumpy ride because obviously inflation being that high means that if you're invested for the annual average returns of the FTSE 100, in the last decade, I'm pretty sure you would have underperformed if obviously inflation was consistently that high across the period as well. But usually with inflation, assets that are generating high amounts of cash and have a lot of cash flow typically do quite well, hence why perhaps the general indexes are doing particularly well, but a lot of the small cap growth stocks are not doing so well, which would explain quite a bit. And this came after the news of the Federal Reserve in the US, and they were talking about the idea that they were tightening they were tapering their asset purchasing program, and I think it was something like £30 billion per month or something like that. And I think it was actually a lot more. And then they're also looking that in the next 2 years, they're looking at 3 interest rate rises in each of those years. So there could be some big moves in interest rates, and it will be an interesting place to see and watch what happens. Overall, I think my stocks are particularly going to be slightly impacted by this. I think the asset of Bitcoin as a cryptocurrency is likely going to be impacted by this as well. Bank accounts, savings accounts looks more attractive. People are going to start going down the risk scale. People will start selling out of cryptocurrencies, moving out of maybe more speculative high risk stocks and moving into more consistent stocks. This is what I mean. It will go down the train as people move out of stocks. They'll go into perhaps bonds and then perhaps elsewhere. Bonds at the moment obviously have a low yield, so their attractiveness versus that of equities is not very good. But as the yield rises, as the interest rate rises, bonds become more attractive, and we may see another environment where bonds look very attractive towards investors, and that could be obviously a game changer for a lot of people in their investment strategies, because I imagine at least in the last decade or so, a lot of people likely weren't investing in bonds unless you were playing a much more secure defensive portfolio, or you were nearing the age of retirement and you needed less volatility, for instance. So it will be interesting to see how times change. I'm not going to change what I'm buying. I'm going to continue buying the same stocks because I think they're being beaten up, but I think they're also being unjustly beaten up. And I'm not too particularly interested in bonds at the current interest rate. I'd rather invest in companies that can perhaps grow by a faster rate. But I will be interested to look into bonds a little bit more deeper in the future, and perhaps we can see what I can learn from it. Let's say when interest rates are, I'm going to say, substantially higher. Now, obviously, the big news this week was Boohoo's trading update or profit warning, which on Twitter I immaculately managed to time that. I was like, expectations of a profit warning? Nah. 2 days later, this comes out, and obviously it aged like fine wine. And in particular, the results weren't that impressive. You had the US declining by 14% in the last year. You had the rest of the world declining by 21% and the rest of Europe declining by 12%. Admittedly, I saw that. I was like, right, okay, has the story changed for Boohoo? I saw the UK growth, which was 32%. And I figured, you know what, if the UK it didn't have growth, if we were looking at less than 15%, I likely at the moment would have just went, right, I'm cutting my position and selling out and accepting that as a loss. But I did not. I looked a little bit deeper into it, and in fact I'm going to tab over to the tweet I sent. I put a big thread on all of this, and basically I explained that I wanted to keep as balanced as possible. I wanted to avoid narrative fallacy framing bias, which is the idea where you might make up a story to positively explain a losing situation, something that I know a lot of people can fall victim to. So it is crucial to keep a balanced mindset, hence why I completely reviewed the stock again on that day and really let myself think about it. Because when you're reacting emotionally in the markets, and they say there's a study, I don't recall this could be a completely wrong figure, they say that when you are being emotional, your IQ drops by 50 or up to 50 points, particularly when you are being emotional in a negative way. It impacts your clarity, your thoughts, and it means that obviously you will not be thinking clearly, and so it can lead to irrational movements such as panic selling a stock. So I figured, look, the share had already dropped massively. There's not something I can do. I'm not going to be able to time the market. So I sat there, I took the time to think about it, and I even did this the day before because I was looking at something else, and I was like, right, okay, do I want to do this? And I would just balanced mind. I went for a walk and I thought about it. Okay, what would happen if I did this? Is it wise to trim your losers? Is it wise to just completely cut them? If you trim your losers, why are you trimming them? Then if you are trimming your losers, if you're trimming them, why would you not cut them? Okay, that gets very, very confusing. But the idea is here, if you're selling, why not sell the whole lot? In particular, that would be perhaps to a loser. And I think when a stock drops by 20%, as by the teachings in The Art of Execution by Lee Freeman Shaw, this person in particular suggested to the people or the fund managers he had working for him that actually when your stock drops by 20%, you need to evaluate your position. You need to work out what you're going to do with it, and you do not want to become a rabbit. There's a link in the description down below to that book. And the idea of being a rabbit is where you sit there inactive, your stocks are dropping, and what you're doing? You're trying to just push the problem away, you're trying to ignore it, and you're trying to forget about it. But in investing, you've got to bring that to the forefront. You've got to see, okay, at the moment, at least according to this screenshot, Boohoo was down 45% as of recording that, or as of that screenshot on my Twitter page. In that moment, I've got to think, right, 45%, that'll take many years to recover. Do I hold the position, sit there and do nothing? Do I, obviously, I review the story. Has the story changed? Personally, I don't think the story has changed, but the business environment has pivoted, and I'll explain this a little bit more in a second. Okay, if that's the case, is it time to cut my losses? Is there no growth potential in the future for Boohoo shares? And I felt, actually, no, there is growth potential in the future for Boohoo shares. So the other option I had was to substantially lower my average price and buy more shares, which means for now, my exposure to Boohoo is going to start cranking up. And as I'm putting more money into it, as it is below a significant price, below my average, I'm going to probably end up with something like 80% exposure to Boohoo, which is not the case at the moment, but may happen over the next few months, maybe half a year. I anticipate that shares may not bounce back so rapidly. I do appreciate that on Friday they did rally up quite significantly, but I'm not here for a bounce back. I'm here for the long haul. So I'm going to be investing consistently and continually buying this. But when I say, okay, has the business environment changed? Well, it particularly has. And on my tweet, I mentioned they've had significantly higher returns rates. They've had extended delivery times and significant inbound freight cost inflation. Now, one of you had reached out to me and said, hey, look, I work in this industry. Prices or cost of shipping inbound and outbound have remained high, and the industry perspective is that it's likely to remain high. So this is going to consistently impact Boohoo's earnings before interest, taxes, depreciation, amortization, or EBITDA, meaning that their EBITDA expectations are now at 6 to 7% compared to 9 to 9.5%, reaffirming the idea that their long-term guidance was 10% EBITDA. So obviously their profit margins are getting substantially squeezed. In an environment where we see lots or high amounts of inflation, a company with low earnings margins is going to be seen as a lower quality, and substantially investor sentiment has lowered and people are selling out. There's also talk of all of the short sellers. Quite frankly, I could not care about the short sellers. If they write a report like Boatman Capital did did on Argo Blockchain or like Shadowfall did on Boohoo, I will happily read that. And it's the same as analyst perspectives. Analysts can give their views all they want, but I'm not going to listen to the price targets and what they're saying about it. I want to see their opinion and contrast it to my own. Okay, they're quite bearish on the long-term future of Boohoo. Now, why is that? Okay, oh no, they're saying actually the impacts impacting Boohoo, or the problems that Boohoo are facing are transitory, which I think is, I can't even transitory, which is a really bad word to use now, obviously, after the Fed have said that. But they basically meant, okay, it's temporary. Well, if that's the case, I will think about why will these be temporary? Or perhaps, are they truly temporary, or are they going to be a long-term running thing? So I always try and counterbalance any argument. Even if I'm buying Boohoo stock, right, and even if I hold it, I'm happy to view all the bearish or negative opinions on the company. I'm happy to sit there and discuss. And in fact, I've been on Twitter a lot more lately. People have been barraging me with questions. Some people have been quite critical as well, in a good way. And I've been using that information to be like, okay, I'll just keep asking questions, keep learning more. And that is important. I think in this game, you've got to always be striding to learn more. Otherwise, if you sit still and think you know it all, you're going to get caught when you don't expect it. Besides the point, Boohoo is struggling. Their net sales are slashed for this financial year to 12 to 14% growth from 20 to 25%. Their medium-term guidance remains the same. Their medium-term guidance was 20 to 25%, CAGR of their revenue and roughly 10% EBITDA margins. This changes, so long-term guidance is 20% revenue growth. That is fine. That is high enough growth for me, but this proves that it might be difficult for Boohoo to achieve this because they've had extended delivery times. Right, it's important to note that Boohoo are UK based. They have something like 40% of their production made in the UK, 20% somewhere else, and 40% in a third world country somewhere. Something like that, I don't remember it off by heart. But in particular, their distribution centre is in the UK. Now, this is important because when Brexit comes into things, this obviously makes it very difficult to ship to Europe, especially when obviously there's costs and changes to shipping and prices, making their margins higher, delivery times longer and extended. It's all obviously hitting back at Boohoo and it's slowing down their growth because Boohoo's business model is test and repeat. If they want to dominate in the industry, in fact fast fashion in general, and I believe I had written it down here, you will need to provide lower cost, better designs, and faster production for growth. So that's why we've seen Boohoo have done well. They've grown their revenue or net sales, by 32% in the UK. They've proven because they've got the infrastructure in the UK, they can still dominate, offer low prices and fast delivery. However, when we go to the rest of the world, the rest of Europe, and the rest of obviously the US, they're all going to struggle because there isn't the necessary infrastructure in place, which is good because they are looking to create, or their first US distribution center is expected to go live in 2023, and they're looking to expedite or speed this process up. Good sign, but is it too late, as I've mentioned on the tweet? Now, if they're able to speed this up, they have something like £70 million of net cash on the balance sheet. Now, with this capital available, they likely could speed this up, but you also want to be careful, right? Do they want to run too low? And I anticipate their margins are going to remain low for the next 5 years. This means we could be seeing Boohoo, and this is just speculation, not calculation, we could see profit margins of something like 0.5%. That is not a bother to me. This is a growth stock. I'm invested for the growth and the long-term prospects. I'm interested in how well they can grow their overall sales, and then how well they can grow their earnings over a longer term period. If they're going to hit a dry patch, struggle on earnings for a bit, that is not a concern to me. They're not paying a dividend. They're not obviously doing that. As long as they have free cash flow and they're able to keep growing, I am more than happy. So it is necessary that they invest in infrastructure like the US. And if they set up in the US, they can provide faster delivery times, better designs, and obviously lower costs, and then they can outcompete the rest. Yes, Shein is an issue. They became the most installed US shopping app in May, briefly overtaking Amazon in the US. Shein has lots of data. They can outcompete Boohoo, but Boohoo's UK advantage is their infrastructure. If they can build this infrastructure and prioritize the right places, I'm saying disregard the rest of Europe and the rest of the world for now. Focus on the US and the UK. If they can build upon this, they can do very well. And obviously the odds are stacked against them. It will be a struggle. Now, you've not really seen me talk about valuations before that much on the channel. Boohoo's market cap as of this tweet was £1.48 billion. It's now sitting at around £1.3 3 billion, I think. I'm not too sure. Now, the revenue for the full year, or the financial year of 2021, was £1,745 million. This means their price to sales ratio is 0.84 times, likely to change because that's last year's revenue. I was being, if anything, conservative. Then we have an expected EBITDA. Remember, earnings before interest, taxes, depreciation, amortization of 117 million. I'm going to use the lower end, which means their price to EBITDA is 12.65 times. That is an attractive multiple, and it's not really fair to compare Boohoo on EBITDA if they're going to be putting a lot of expenses into their facilities. Probably not the metric you'd want to look for growth. Their enterprise value is roughly estimated at 997 million pounds, which means that enterprise value over their EBITDA is 8.54 times, and anything under 10 is very attractive. And this company, as mentioned before by someone on Twitter that was talking to me, is being seen as X growth, as if all of the growth is now behind them. And obviously that would be a negative. And quite frankly, I'm not bothered about that. I am going to continue buying, and I'm going to explain why now. Now, things might be particularly interesting because I have definitely reshuffled my portfolio today, and this involves Argo blockchain as well. Boohoo, my conviction lies with them, as I've explained. Obviously, their growth in the UK is strong, but the rest of the world isn't so great. I believe they'll need to pretty much spend a lot of money on building infrastructure, and this will take years. This is a slow game. I'm down on the investment. I believe it is a time to substantially average down and materially impact my average price so that then I am set for the longer term future. Otherwise, I would obviously be cutting a large point. You might go, well, what if you're in denial? Perhaps you don't want to cut your losses. Perhaps you're too afraid. It's not about that. The story hasn't changed. The business environment has certainly pivoted, and it doesn't look as attractive as it did before. But to remember the idea that obviously the UK net sales were up 32% over the year previous in which we had lockdowns and everything in the UK. We think we had like 3 of them plus tiered lockdowns in certain locations. Boohoo had massive competitive advantages over the high street retailers. So obviously, like, to see us grow even further, I say us as if it's a football team, to see Boohoo grow much further beyond that, like, it's very impressive. And so what I've done is really change up the board a bit, and I've actually been trimming down my position with Argo blockchain. And now this took some thought. I was looking and thinking about the idea back when Boohoo was sitting at 140, 150. I was like, where does my conviction lie? Does it really lie in Argo blockchain? Because I don't understand the underlying asset, and I commonly attribute this as one of my biggest mistakes because I bought into the FOMO, the fear of missing out of Argo blockchain. If you're interested in that, I'll leave a card at the top right of the video. But long story short, I bought into the business because it seems simple. They're mining Bitcoin, right? They're doing well. They've got high margins. They're using green energy. They're in the US. And obviously at that point, China had shut down a lot. Bitcoin historically has done quite well, although you can't invest with your eyes in the rearview mirror. You can't drive looking in the rearview mirror. However, with that in mind, they look promising. And I was thinking, yeah, that's a simple to understand business. That's good. But then it was also too simple because the underlying asset of Bitcoin, could I explain that to you? Absolutely not. I could understand some forms of use case as a store of value. Perhaps there is obviously value for it and it may grow in the future and it's more acceptability as more transactions are done. I'm already out of my depth with what I'm talking about. And so really, I don't understand it. I bought too much. And it always was a speculative position at first. But then I forgot. I didn't think about that again. I was like, well, the stock's dropping. I need to buy more. And obviously I was buying a falling knife at the time, which went horribly. And you could also say, okay, what if Boohoo's a falling knife? Well, if it is, this time I'm prepared. I'm scaling money in. I'm putting some money in here and there and being consistent with it. I know that obviously I'm going to be, well, hopefully still in a job in the next 6 months' time. So I'll be using a majority of my earnings power. And I'm hoping to invest about 80% of my take-home pay into the stock market and continue building. And this means no more drinking. And this is definitely the shake-up I needed. I'm going literally into monk or hermit mode, whatever it is, and I am just going to chill. I'm going to be reading books. I'm going to finish reading Richer, Wiser, Happier. I'm going to order One Up from Wall Street for Peter Lynch. I'm just going to chill. I'm going to continue going to the gym 4 times a week and relax. This is the time where, okay, this is probably realistically in 2 years, or since I've been doing this YouTube channel, just about 620 odd days, this is probably the poorest I've ever felt, just because I am absolutely pushing as much money as I can into the markets right now. But obviously I've got to be careful. I don't want to buy too much too soon, but I'm going to consistently pound cost average into the markets. But going back to Argo blockchain, I said this was a mistake. I exposed myself to it. And I put this, I was going to set an exposure limit at like 20%, and then just did not do that. I was like, I overruled it a day later. I was like, well, actually, no, I think there's value in this company, this, and that, and that's why it's going to grow. So I bought more. But I don't understand the underlying asset, and so I'm now seeing myself down about 50% and thinking, was that really worth it? Probably not. And I'm not panicking over it, although obviously my emotions towards that was a lot more negative, because when it dropped, I didn't understand why it was dropping, because Bitcoin was fairly consistent. I say fairly, in the last month it has declined a substantial amount. And so I'm like, okay, what's going on? And because I don't understand it, because I've not done the research, or because I just don't understand the underlying asset of Bitcoin, I could have fallen victim to panic. And so what I did is I'm like, right, you know what? I'm going to cut back my exposure, make it a more moderate level. Diversification is protection against ignorance. That's completely fine. So I'm looking at an exposure of like 5 to 10% with Argo blockchain. That's what I want. I don't want more, don't want less. Yes, this means I'm going to be cutting and taking capital losses of about 3,000 to 4,000 inside an ISA shelter where I can't even claim this back off as obviously a loss. That is fine, because I'm going to push that money into Boohoo, which I think will recover very well over the longer term, and are still a winner. I've not even mentioned the attractiveness of Debenhams. I don't even think I've got the time to dive into Debenhams, but I've been doing that with my capital and really buying Boohoo. So if I obviously throw back to the portfolio screen, you can see here, look, I now hold 7,690 shares of Boohoo at an average cost of £2.06, or £2.07 according to the spreadsheet, but the spreadsheet is about 0.2 pence off. It's a little bit inaccurate, but this is obviously on my Patreon. If you are interested in the Patreon, it's £2 a month. You can get access to my live holdings. You can see all of my transactions, which you can see here, all the way down here, all tracked and all accurate. And you can audit it for yourself. You can see, okay, are my returns legitimate or are they wrong? You can check it yourself with the Patreon, £2 a month. And you also get your own spreadsheet where you can add your own stocks in and see how you're doing. It's obviously under consistent development. I'm adding more to it as time goes on and as I get better. But if you're interested in that, link is in the description down below. But regardless, so now my position size with Boohoo is 7,690 shares. I would like to get 10,000 shares. I'd like to move my average price down substantially. At this point, I want to get it down to £1.50 per share. I think that's reasonable, and this will take a lot. I'm talking a lot of work. At the current share price, it would take probably double my position size, so about 15,000 shares to reach that point. And you know what? That's completely fine with me, because I'm willing to just keep putting money into it. Just keep pushing money in. I've obviously lost the equivalent of about 2 to 3 months worth of salary. With Argo blockchain, that's fine. I still hold 2,500 shares, which represents 12.1% of my portfolio. If I'm honest, I'm probably going to cut that by 1,500 and then just let the rest of it sit for a while. Just, you know, bank on it, let cryptocurrency do its thing, but not have it so much of an allocation where it's really swings my proportions of my portfolio. You might go, well, you're too exposed to 2 stocks. This is a disaster waiting to happen. Boohoo is already down by 50%. You don't know what you're doing. Stop. Look, I'm taking risks because I don't have to pay for housing over my head, because I don't have dependents requiring me to be obviously having money. I'm young. I'm able to take this risk. I've not got financial obligations to be met at a consistent basis, and I know I can survive. For instance, I'll just continue eating beans on toast, peanut butter toast, and like cereal. It's fine. Obviously, it's not the best thing for your diet and your health, but I can tank through that. That's literally fine. And so I'm not concerned about this. You could say, well, you're being foolish. Maybe I am. And that's everyone's opinion, and you're completely entitled to do that. And I understand there's been a lot more criticism, a lot more comments, and you've got the typical hindsight investor. Well, I told you to do this a month ago and you didn't listen. I appreciate the opinions. Thank you for telling me, but I'm obviously going to continue with my own mindset and my own opinions. Everyone's entitled to their own, and that's fair. And so, yes, the changes I've made in the portfolio, you may not agree with. You might go, well, why are you selling Argo blockchain? Pointless. Fine. That's completely fine. You do that. But I'm going to continue doing my thing. I'm going to see how this does over the longer term. I've not been invested long enough for my performance to really be substantial. Yes, on a percentage basis, over 620 days, I am down 30% of my capital. Yes, that is a significant amount in such a short period of time. However, I'm invested for the longer haul. I'm invested years. I'm talking decades. This is money I do not need to touch. I can leave it to the side and forget about it, and I can keep pumping more money in. My losses can be completely recovered. For instance, my total value of my portfolio currently is far less, and obviously I think Boohoo's closing price is actually higher on the spreadsheet than it will be when I screenshotted my portfolio. This will be far less, well, I say far less, it's less than my annual salary. I can pump this back in a year's time. That's good. I'm earning about £22,700 plus when you add a constant bonus, you're looking plus, there's something else I missed. I'm not thinking straight. I'm looking at around about 26,000, I think, and I've calculated that, and that's not including YouTube, which for the last tax year earned around £3,000. Probably earn about half that for this tax year. The idea is that I'm earning a fair amount of money for my age. I'm 22 years old. I'm just going to keep putting money into the markets, and that's exactly what I'm going to do. And I will continue. And obviously, we had the analysts rating so many different cuts, like a ridiculous amount. We had obviously, like I'm not even just going to go through all this, but they're all going, oh yeah, let's all slash the price targets. Yeah, let's all cut this down. Yeah, this, yeah, that. Okay, yes, their EBITDA has changed. Their future outlook has changed. The business environment has changed. But analysts are so like behind the curve. Like, why didn't we see this in advance of this? Obviously, I understand they need to reaffirm their guidance and change it based on the information they now know. But if I really wanted to trust analysts' predictions, why would I not look at their pasts and see where they're going? Because a lot of these, or some of them, were like, oh yeah, well, 395 pence. Like, cool. But it's now changed substantially, so something is wrong there, and that's why I don't really generally agree with analysts. That is a particular career line that I would be interested in going into, but not for investments and securities. I'd rather look at it from an operations standpoint and see the viewpoint of a business, not like this. And you know what? You can say I'm wrong, and that's completely fair. Just don't agree. And Boohoo Man has released an NFT or non-fungible tokens. Again, something I do not really understand. There's 8 of them. The best offer was 0.005 Ethereum, or about $20, which to be fair is more than probably the typical price for products on Boohoo. So yeah, not a bad result. Important to mention as well, this is a really random fact that I've slipped in, but Boohoo's average transaction value is £46. Very random, but interesting to note if you are interested in that. And that was on the 6 months presentation with the results ending September. And Argo Blockchain has built half of their tin shed. Yeah, impressive, great. I want to see this facility up and running. I'm not going to be holding as much shares, but obviously it'd be nice to see them consistently deploying that. I'm concerned about their future, how much cash they're going to be burning through in an inflationary environment, and especially when what they're going to do, they're going to have to take up debt, they're going to have to sell their hodl, which I don't think they're going to do, or they could take up debt based on their increased hodl and then use that as collateral, or they can dilute shareholders. All of this makes the quality of the business lower, and all it takes is Bitcoin as an asset to drop for an extended period of time, and shares will get wrecked. There is no real protection, I suppose, to shareholders, and so I'm obviously substantially cutting my exposure and leaving that down. I'm counting my average price as £1.87 per share for Argo Blockchain, even though I've sold it and likely taken more of a loss. Freetrade will say different, but I'm going to stick with what my spreadsheet does because that's the price I had, and then I can update the performance as time goes on. I hope you like this video. I did try and really go on about Boohoo because I think it was a very important topic to discuss this week, and hopefully it has helped. If you're interested in my 10 UK stocks to buy in 2022, then click the card at the top right of the video. Thank you for watching. Have a fantastic day.